Hi, this is Danny Kenny of Financial Planner. Today, I'd like to talk a little bit more about how planning differs for the fire community from the general population. Today, I want to focus more on thinking about your asset allocation and how that might differ if you're in the fire community. So because you're looking at retirement potentially for a much longer time period, you may need to be a little bit more aggressive with your investments to make your money last for 50 or 60 years. So thinking about the implications of that and what that means in relation to your risk tolerance is something we can work through together. Some other things to think about are what's the upside potential of your portfolio allocation and what's the downside potential. So if we're looking at a 50-50 stock mix versus a 75% stock, 25% bond mix, what's the added or incremental return you can expect to receive with that higher stock allocation? But also thinking about, if the stock market goes down in a bear market, what's the difference in losses? And how much extra time will it take to recoup those losses, given the different allocations to stocks and bonds? So also another thing I like to talk about is thinking about rental real estate. How does that play into your portfolio? And whether that income production means that you can reduce your bond allocation, or maybe because real estate tends to move in tandem with the stock market. When stocks are going up, real estate is good. But even when stocks go down, real estate tends to take a hit as well. So how does that interaction impact your plan? So talking through those implications and where real estate fits into your overall net worth and balance sheet. So that's something we can definitely talk further about. And finally, thinking about the cash needs from your portfolio. So if we know that we have a cash need coming up because you're going to buy a house, or you're buying that rental property, or you're close to early retirement and you're starting withdrawals from the portfolio, how do those cash needs impact your allocation? And how does that impact the risk that you have from sequence of returns risk? So thinking about entering early retirement and withdrawing from your portfolio, we don't want to suffer from a market downturn and you be selling stocks when they're down and have that major impact to your portfolio's life, especially if you need it to last for a long period of time. So thinking through those different elements all play a role in thinking about your asset allocation, and they all kind of differ from the regular retiree at 65 or 70. So if that's something you're concerned about, please click the link down below if you're on YouTube to my website. If you're already on the website, great. Please click the link up here to schedule a call. Be more than happy to talk about how your asset allocation differs because you're pursuing early retirement. So happy to chat. Please check out the links below, like I said, and schedule a call if you'd like. Once again, this is Danny Kenny from Financial Planner. Thank you.